Friday, ladies and gentlemen, and welcome back at your friendly neighborhood PM with your top 3 market points of the week. Now, I wish I had better news, but it looks like we are on track for the 5th straight week of weekly declines for the S&P 500. That would be the longest such losing streak since 2022. So let's just dive right in and see what 3 market headlines are really driving markets this week and get you on your weekend. Kicking us off at number 3, it's TSA Funding. So legislation has gone through the Senate, is on to the House and the President in order to help end the partial government shutdown. Now, the bill has been largely hung up over funding language when it comes to the Department of Homeland Security and ICE, but operational issues and major wait times at major airports like Atlanta, Houston, New York, where we're seeing people wait in security lines for 4.5 to 5 hours, has caused such an uproar that both parties have come back to the negotiating table to help end this shutdown. So we are trying to make some progress there. And as this alleviates and we start to see more progress on the negotiation front, we'll keep you informed here. But hopefully you're not staying in the security lines too much longer. At point number 2, it was Meta. So Meta fell close to 8% in a single day yesterday. They are really at the nexus point right now due to AI spending concerns, in addition to the fact that they also just got named liable in a social media addiction case. So they are getting a lot of headline and headwinds getting thrown their way right now at a very tumultuous period of the market. In addition to that, though, it's not really stopping Meta from spending more and more on AI data center compute, because they have announced just the other day, just this week, that they're going to ramp up their spending for an El Paso data center from $1.5 billion to $10 billion. So Mark Zuckerberg and Meta are still going full speed ahead on building out AI infrastructure. And finally, at point number 1, it's probably the main thing that you could guess right now. It's the Iran war continuing to drag on. Now, President Trump did come out and say that they were going to issue a 10-day pause on attacks on energy infrastructure in the region and Iran. However, that has still not made meaningful progress yet, in addition to the administration also announcing that they may be sending even more troops over to the region, close to 10,000, in order to help facilitate moving forward and ending this conflict. However, Iran has not accepted any of the potential peace plans that have been set forth to them. The administration sent them a 15-point peace plan, and Iran rejected that. So right now, it does not look like there's been meaningful progress yet on the front to facilitate this, and that continues to put pressure on equity markets and energy markets, as right now there's still little to no traffic going through the Strait of Hormuz, and that is why we're seeing elevated gas and energy prices right now. And that does it for your top 3 points of what's driving the markets this week. What are we checking out for next week? Well, next week we will be eyeing the labor market with non-farm payrolls data and unemployment data to see how much this conflict and this war in Iran and the Middle East is starting to trickle through into the broader economy here stateside. Now, that does it for this week's video. Obviously, if you have additional questions, please reach out to your financial advisor. But if you do not have one, please follow our link below and we will happily get you connected with one. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.